welcome back to today's topic. Today's Wednesday, and we are going to talk about financial literacy. And in my last video, I talked about assets, asset class, and inflation. So in today's video, we're going to talk about stocks and the different type of stocks. So, but before we get into that, I would like to thank you for coming back and checking my channel out. Please subscribe, like the video if you haven't liked the video already. It helps my channel. It helps push the information out to other people that this that Google, YouTube feel like they can benefit from this information. Just like the like the video and subscribe. It will really help my channel out a lot. Thank you. In this video, I highly recommend that you watch the video. The link will pop up right now. Go and check out this video. This video talks about all the different, what are asset classes, all the different asset class, and in today's video we're gonna touch on how to, within this different asset classes, like for example within equities, which section of it is better to you to put money into. For example, is it better to put money into blue chips or like defensive stocks? When should you put more money into what? I'm gonna get into that a little bit today. So if you haven't seen this video, I highly recommend you go back and go watch this video right here. For the hold ups, let's get into today's video. In today's video, we're gonna touch up on types of stocks, right? Because there are different types of stocks, and there are reasons why you wanna put money into different types of stock. Typically, there are four main ones. I mean, there's more than four, but there are four main ones, right? I don't want to put up 20 in here. It don't make sense. There are four main ones. The big one that we all know is like the blue chip stocks, and I'm going to get into those in a minute. Blue chips, penny stocks, growth stocks, and defensive stocks, right? Blue chip stocks are usually companies that are like matured. Penny stocks are usually more riskier companies that maybe are on the verge of they're usually a little bit more risky. So usually like a lot of bio companies are usually penny stocks, and penny stocks are any stock that is below $5. I think $5 or $3. Those are called penny stocks, right? If it's below $5 or $3, called penny stocks. Growth stocks are stocks that has a lot of potential. Like the one of the companies that I really consider, I'm very passionate about what they do, is Tesla. And Tesla is an extreme growth stock. It's such an extreme growth stock. But yeah, that's an example of a growth stock. Another example of a growth stock still is like Amazon. I'll get into those in a minute. And then you have defensive, right? Defensive companies are companies that no matter what happened in the economy, if there's a tsunami, if there's a recession, if there's a war, if there's anything, no matter what happened in the economy, as a human being just existing in this world, you still need them. You still need those you need to go to those companies to buy stuff. So you need to go there to buy food, you need to go there to buy supplies, you need to go there to buy different things. So those are categorized as defensive stocks, defensive companies. Okay, so in the next slide, let me get to the next slide. In this slide, we're going to talk about blue chips. Like I said, blue chip companies are basically companies that are matured, companies that on a daily basis you have to use their stuff. Like using their stuff is part of your life, part of your existence. Basically, those are like companies that are, blue chips, right? As you see, Facebook here is a blue chip company because they do ads. We all use their Facebook Marketplace. We talk to our friends and stuff like that. They one of the big pioneers of social media and stuff like that. So Facebook, they own Instagram, they own WhatsApp, they own a whole bunch of different subsidiary. They also trying to branch into Africa in terms of laying down different cables to get internet into Africa, because Africa is the next growth continent. So they're doing a lot of different things in the background. And we know Apple, we use their phone, we use their stuff. We know Apple. Amazon, you already know Amazon. Amazon is a company that we all rely on, especially right now because of all this issues that we are going through because of the pandemic. We all rely on them. So Amazon is also a really good one. Amazon is a really big blue chip company. As a matter of fact, I would even consider it as a growth stock still, because even though Amazon is at $2,000 right now, you never know. Maybe you could get up to who knows, 5,000 one day. Who knows? Netflix, we all know Netflix. They're still growing, but they're not growing as much as they were, because obviously the market is being saturated now. Disney is coming into play. There's a bunch of all the old legacy companies, Comcast, all these companies, they're all trying to encroach into Netflix space. So, but Netflix is the king of streaming, right? They're like the king of streaming. Like the way Facebook is up there when it comes to social media, Apple is up there when it comes to creating products, phones, services, things that work seamlessly that we all need in our life nowadays. Same thing with Amazon, next day delivery, seamless. You don't have to stress. You just order it and you get it the next 2 days. Same thing same thing with Netflix. Everybody are talking about their programs. People watch their stuff. Basically, Netflix is basically replacing TV. And then we have Google. Like the biggest thing that I can touch on with Google. I mean, it's not even the biggest thing, but it's also pretty big. Like, for example, YouTube that you're watching this video on right now is a product of Google. We all use YouTube. We all create content on YouTube. Some people even make their salaries from YouTube. Some people watch YouTube to learn from it, like you're watching to learn now. So these are the type of companies that you want to be thinking about when you're talking about blue chip companies. When you're talking about blue chip companies, you want to be thinking about companies that are ingrained in people's lives and people in society, companies that people need and want to use their products and services. Those are the companies that you want to think about when you're talking about investing in blue chip companies. Okay, so here's a chart. Just a simple chart about Facebook, Apple, Amazon, Netflix, and Google, right? As you can see how their growth has happened. The Netflix probably grew the most. Netflix grew the most within this past couple of years. But I mean, you can see if you have a little money into it. Let's say you had 100,000 and you put it divide it into all these companies, right? Your money would have been really well. You would have been really, really well off right now. So this is what you can get with blue chip, very well established companies, because they earn a lot of money, and the investors, people that invest in this company, the way that you make money is you can make money through the dividend that they pay. If they don't pay dividend, you can make money through the growth that they're going to provide in the future. So let's say we take a company like Netflix, for example, that grew the most at this point. Let's say you had $100,000 in Netflix and you just put it in 2014, and now it's 2020 right now, but this is an old chart. In 2018, your $100,000 basically almost touched 800,000. So you could have sold 700 and still keep your 100 grand invested in the company, right? So this is how I think about growth stocks. I think about, okay, how much did I put in, and how much has the money grown? Can I take the profit out and still keep the amount of money that I put in and see what will happen in the future? So these are examples of growth stocks. I mean, growth blue chip companies, right? So let's get to the next slide. The other important aspect of investing is you want to also think about defensive companies, right? Defensive companies are companies that defensive stocks are basically, in this case, I'm not talking about like, arms defense. I know this picture is a little bit confusing, but defensive stocks are basically just stocks that are in this category right here. Utilities companies, consumer staples like Walmart and McDonald's and Coke and Con Edison, PSC&G, those companies that you still need as stuff regardless what's going on in the world. You need to be in your house, you need to have warmth, you need to have water to drink, you need to be able to sleep and wake up. So those are defensive type of companies that you should always incorporate into your portfolio, and I'm going to show you mine in a minute. And yeah, these are examples of defensive companies, sectors of defensive companies, and these are examples of defensive companies. So if you go back to the chart again, this is the defensive sector that we're talking about right here, and these are some of the sectors of the defensive area that you might want to look at. So utilities, consumer, pharmaceutical companies, property companies, companies that own malls, companies that own real estate that people rent from them. So those are what you want to be looking at right there. And then we also would want to look at the next sector, which is growth, right? Growth is basically companies that are in growth mode, that are innovative, that are unstoppable, that regardless of what happened in the economy, the company will still come out ahead. And the company that I can think about the most right now is this company right here, Tesla, right? Disney is a little bit in that field because they have different industries that they're in. They are just getting into streaming. So like these two, they might be really, really big competitors in the future, but Disney has a little bit of an advantage because they have all this animation studios, they have parks, they have cruise, they have all this different section of their business, and now they're getting into streaming, which is getting into a little bit of getting into Netflix world. And then Starbucks as well. Starbucks is also a growth company because they're expanding as the world gets richer. Starbucks is finding ways to expand into all these different markets, right? So they're in China, they're in Asia, they're in all these different parts of the world, right? But the one that I'm when it comes to growth stocks, I'm putting my money mainly into Tesla, and in the future I'm going to be putting a lot more money into Tesla because Tesla is a hyper growth stock. Tesla is an hyper growth stock, and one day I'm going to do a more deep dive into Tesla. Okay, so the last part that we want to talk about is penny stocks, and this is the area where most new people that they get into investing, this is where you get lost, right? You want to buy the cheapest stock because that's the cheapest stuff that you can afford. You don't want to jump and buy Google or Amazon. Amazon is like $2,000 a share, right? That's where people that's where they think they can start, right? They can start with a cheap one. But I'm here to tell you, like me personally, I don't really invest in penny stocks. I don't invest in penny stocks whatsoever, because the one reason why I don't invest in penny stocks is the people that make money are the people that are on the top. Like, for example, if let's say you're person A, right, and you're looking at this penny stock, you're like, man, this company is doing this company is doing that, da 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 da. Okay, and you now go in, you buy the penny stock, and come to find out, as you're buying it, this guy on the top, which is the richest, the people that have the big bucks, the people that have a lot of money, that they can put $1 million into a stock, pump it up, and as the stock is pumping up and more people are buying it, they're selling it to you, because they just bought it and they just pumped it up, right? Obviously, penny stocks are usually penny stocks that get most actions are usually companies that are maybe on the verge of turning and doing something better, doing something different. For me personally, I don't really do much of penny stocks. I avoid penny stocks like the plague, man. I avoid penny stocks, so please do avoid it. But I do invest in companies like this, blue chip companies. I do invest in defensive companies, and I do invest in hyper growth. And I'll get to an example of those in a minute. Example of how you can break up your investments into different sectors. As you can see here, I have the real estate sector, consumer sector, finance sector, tech sector, which some of this industries like defensive, energy, industrial. So like, for example, if I pop into industrial here, we'll see all these different companies, right? Boeing, we know what they do. They make planes. Raytheons, they make defensive products like fighter jets and stuff like that. I'm not going to get into the politics of that, but they make jets, they make defensive products. 3M, they make toothpaste, medicine, they just make your everyday regular stuff. Lockheed Martin is in the defense industry. Waste management. Waste management, obviously, your trash still needs to be collected, still needs to be sorted, still needs to be recycled. Caterpillar, they make all the big construction machines that is being used out there. This is an example of defensive stocks, companies that no matter what happened in the economy, they're still gonna be growing, they're still gonna be doing their thing. It's not gonna affect them. Another one is in real estate. This company, they have a lot of properties. They rent to Walmart, they rent their properties to, they have Walmart, they rent their properties to big businesses. Simon Properties, they like the biggest mall owner in the world. Like almost like 40 to 50% of the malls in the United States are owned by Simon Properties. So these are big companies that are ingrained in society, in the economy. Utilities, let's go into utilities here. You have all these energy companies, right? We still need lights, we still need all these things. So here I'm gonna really do a deep dive into all this stuff and into all this portfolio. The reason why I picked those companies, look at their balance sheet, their income statements, and all those things, share all the stuff with you guys. But right now I'm just trying to cover the basics of stuff in this video. Example of a company that is on a hyper growth stage is company like Tesla, right? Tesla, they make cars, they make power walls, they make roofs, they make, and all of these things are connected, right? They're connected. Like if you buy their car, you're more likely to buy their roof. If you buy the roof, you're more likely to buy the power wall. If you buy the Powerwall, you're more likely to buy 1 or 2 of it so you can store more of your energy. So it's extremely integrated, right? And here are some just very small little trades that I made on them. Like for example, here it was very little money, $160, just to try it out when I started investing initially, right? And as you can see, it has grown by 80%. This is the same thing as if I had $160,000 in this, right? The $160,000 would have turned into $300,000, right? And the way I look at defensive stocks are just when you put in the money, let's say you put in 100,000 or $100, if it goes and triple and 6 times your money, then you want to take out the money that you put in at least and a little bit of profit, and then just let the rest run, you know, if it runs. But on this account, I'm moving all this stuff to my previous account, so I don't really show this one much, but I'm gonna be doing more videos about my individual holdings in the future, like I said. So as you see right here, this has grown by 80%, and this has also grown by 207%, right? These are huge numbers, huge numbers. Let's say you were to put in bigger bucks, right? So this is let me show you right here. This is when Tesla went public. This is when the company went public in 2010. The stock was going for $15. It went as high as, in 2020, it went as high as, if we get to the high point here, it went as high as like almost $900, $833, right? This is a company that is still till today is still in a hyper growth mode, still till today, right? So I'm going to be putting more money into Tesla in the future. Over here and look at their website really quickly. As you can see, you can't order a car online. You can only order it, I mean, you can't order a car in person, you can only order it online. They do have some few stores that you can go into and check out the car. You can make a purchase there. But look, they have all these different lines of stuff, of product that they sell. They sell the roof, they sell their solar panel, they sell, they're coming out with a Cybertruck. You know, these are example of growth stocks, and there are places in your portfolio that you should have this type of a company to help you grow and make your money, help your money grow. For this video, I hope you've learned something new in this video. Please like, subscribe to my channel. I'm going to be doing a weekly review on this M1 portfolio, how much I've put in, how much I put in for the week, how much I got paid for the week and for the month. Like I said in the previous video, I only look at the week with the week's number and the month's number, right? Because that's the only thing I focus on. I do not focus on this numbers. If it goes up or down, I don't care. All I care about is how much money am I feeding into this beast and how much am I getting on a weekly basis, right? Because this is what true passive income is. And I'm going to be documenting this. I'm so happy. If I click on all time right here, I'm so happy that I decided to start doing this now, that I'm taking this portfolio really seriously. I'm going to be doing a video on compounding, to see the effects of compounding, what I'm doing, and share that with you in the future as well. So please subscribe to my channel, because I'm going to be bringing you a lot of really good content. Like the videos because it helps me. That's the only way that my channel will grow and other people will get to see my channel and see what I'm doing here. Like, subscribe, and share this with other people. And thank you to friends and family. You all know yourself that they ask me questions about these things, that they ask me questions, and the only way that I answer the question is by doing this video and putting it on YouTube so they can watch it and the world can watch it as well. So thank you. I appreciate you. Until next time, Have a good day. Bye.